Hi, David here, CEO and founder of the Freedom Founders Mastermind. How do you de-risk your portfolio, particularly when you're at that point in life when you want to transition out of your active income mode to retirement or your next or whatever you want to call it? You're going to slow down, stop, transition out of your business, your practice, and stop trading time for dollars. Well, you deserve it at some point. You should be able to do that, and you should be able to do it without fear or anxiety or uncertainty about where your capital base stands in the marketplace. Now look, we've been through a recent period of time where we've had a bull market up all the way. It's been a very strong market. But as all markets do, this one will end and we'll go through a correction period. You go back to 2008, the stock market, equities lost over 40%. It means you have to start over again and climb back up again with a return that has to be about double what you lost in the marketplace just to catch up to be even. The point is, when you're releasing your active income, you're not going to go back and do it anymore. Hopefully, you can't take that risk. So where do you put your capital? If you put it in money markets, CDs, treasuries, well, those are pretty safe, relatively speaking, but they don't generate the returns you need to offset the high cost of living, inflation, which is not going to go back down again. Inflation that runs today much higher than the government CPI. It's probably running today 8, 9, 10%. And I see it going higher for longer, not settling back down to a target of 2%. You've got taxes. Taxes are going to go up and up and up. They're not going to go down. So by the time you take out taxes, by the time you look at the effective inflation, you've got to get returns up in the double digits. Well, where are you going to get that? Is the stock market going to continue to produce that forever and ever? No, you're going to go through a correction. I love tangible assets. Look, your business is a tangible asset. It's a tangible asset, and it works well because all the time that you owned it and operated it and worked in it, you had your hands on it as an owner, active operator. And that's great because you have the most control over that asset. But when you're moving away from that, you're giving up that control because you want more time. You want to enjoy life. You put in the hard work. So now you've got to go into more of a passive mode. Most people have relied on the financial markets, 401ks, defined benefit plans. And that's only good when we have an up market. What happens when you go through the correction? Do you know how much you need to maintain your lifestyle? Well, you really don't, because you have no idea what's going to take. What you really need is replacement income, replacing that active income, assets, tangible assets that can consistently, predictably replace that income. Now, I love real estate, but not all real estate's the same. You've got to understand there's different asset classes, different times in the market when you want to be positioned in certain areas and not others. I've done this for over 4 decades. I understand the markets, and I have access to asset classes that most people have not even heard of in real estate. That's what makes the real estate market a really good place to be, because the small investor, the retail investor, which is what we are, has a place in that game, but you've got to have a network. You've got to have access. You can either start on the ground and do that for yourself and figure it out and take many, many years to get there, but you could do it. That's the way I did many, many years ago. I did it starting the ground up. Today, I don't want to do that work, but I also need to have risk mitigated, lower risk potential to put my money in places where others can't do it. And that's where you got to have access points, building a network, creating a network. That's what I've done through my life. And now today, I can sit kind of at the top of the food chain and invest my money through other people that I've built trust with, relationships with, done vetting with, and understand where the opportunities are. That's collaboration. That's something that can make a big difference for you if you find the right place, the right group, and learn how to do this, because you've got to be your own financial advocate. You cannot delegate this to other people. So that's how you de-risk your portfolio. You don't follow the herd. You stay away from the common markets. You understand the market cycles and what's gone up for a long time is going to come back down. How do you hedge against that? I'm not talking about timing the market. I'm just talking about hedging your risk. Do you know how to do that? Would you like to learn? Do you know that you can learn this? I believe in you. You're hardworking. You got to where you are through that hard work and dedication. You can do the same thing with your money, but you've just got to take the steps to learn how to do it. And it doesn't mean going back to school and getting an MBA in finance or real estate or anything else. We've got a place in Freedom Founders where we do just that. We help those doctors who are in a position where they want to take their capital base and put it in assets where they have a lot more control and understand where the money's going, and not just tossing it to the financial markets and hoping, fingers crossed, that it's going to do okay for them. If you want to de-risk your portfolio, it's up to you. You've got to make the move. I'm here to help. Just let me know if you'd like that help.